Hello and welcome. In this session, we're going to look at how to prepare the tax return from the accounts. So the first step is to prepare the tax return. We have to make sure we have already prepared our limited company accounts through the accounts production. So the last session, I have showed you how to make the accounts for the limited company. And now we're going to look at from the accounts how to prepare the tax return. Now, it's very important to understand the accounts shows the profit and loss and the balance sheet for the company. And this one we have to submit to a company house. Now, so far, the company house only need the balance sheet. They don't need the profit and loss account for the company, but company house already mentioned from next year they might need the profit and loss account, so that will be also the public documents and will be available on the company house to view by anyone. So what we are looking at here when you prepare the account, so this account shows like how much is the profit and loss made by the business. On the other hand, the tax return shows how much tax we need to pay to HMRC. Now, it's very important to understand why there could be a difference between the company accounts profit and the company tax return tax calculation. Sometimes some expenses that is allowable for the accounts, but it is not allowable for the tax purpose. For example, depreciation, for example, the entertainment, this type of expense normally when you prepare the accounts we show as a business expense, but later on when you're going to prepare the tax return we have to add it back because this type of expense is not allowable expense for the tax calculation. For that reason, sometimes the profit we have on the accounts and the tax we paid on the profit is not same. Anyway, let's have a look our tax return production. There are two ways we can actually find the tax return, or we can create the tax return. First, we can open the accounts. For example, the company we are doing Starware. So if I write Star, it will come and Starware Consultancy Limited. And here we can see the accounts. So if we open the accounts, and from this accounts, we'll be able to create or make our tax return. So once we have the accounts, you can have a look. We have the full accounts here. If we go to the report, and that's our financial statement, we have a trial balance, we have a nominal ledger, so we have everything here. So if we go a little bit down, we can see how much is the profit. So the profit we have here 233,403. So normally you should pay the tax on this amount unless if we have any transaction here on the expense that is not allowable for the tax purpose. For example, the depreciation, for example, the entertainment, this type of thing. But obviously, if we don't have, the profit will be same for the tax calculation. Sometimes the charitable donation also might have impact on the tax calculation because some donation like a qualified charitable donation have a different impact. First we need to add back, then we have to deduct. Even though there is no impact, but still we have to show it on the tax return because giving a charity is not a business expense, but on the other hand, the HMRC allow qualified charitable donation or QCD for the tax purpose. So that's like kind of the thing we have to show on the tax return. Other than if we have a capital allowance, that will reduce our tax liability. And this is how we're going to look at our tax return when you're going to use this account. So let's have a look. So the first thing we can click on the right corner on the settings option, and from here we can just click open a tax return production. So if you click here, so it will ask us to prepare a new tax return. This is the first year of the account for the Starware Consultancy Limited. We don't have any previous accounting period, so we can just click the new return and create a period for that. So this is the one way. And if we want to do from the main menu, we can come here, click here, the tax return, and type the name of the company. And from here, we can prepare the tax return. Story is same, the way we like, we can do the same way. So we can click the new return, and the period. Now, it is very important to remember the accounting period could be different from the tax return period. Sometimes the accounting period could be more than 12 months. For example, if a business is started on middle of June, the first year of the accounts will be more than 12 months because 12 months plus 15 days from the June, but the tax return cannot be more than 12 months. So it can be less than 12 months. For example, you can have a tax return for 3 months, but cannot be more like 13 months. So the tax return has to be maximum 12 months. So here, if our accounting period is more than 12 months, then we have to make two accounting period, two tax return. Very important to understand that. Remember that sometimes what happen when you create the tax return by using your accounts, so sometimes you just make only one tax return. Maybe you don't give enough concentration, the date, and for that reason you submit your tax return. You think I have done my tax return, I submit it to HMRC, but later on you get the penalty because it says your tax return for 7 days or 15 days is still not submitted. So very much important to remember that if you have the counting period more than 12 months, there will be more than one tax return. There will be only one accounts, but two tax return. And the tax return could be less than 12 months. It's not a problem. Now it says creating the period. If I know my period, I can do it manually. If I don't know my period, I can use the counting period. This is the one normally we use. So we click use the counting period, and the counting period from the accounts, it shows 1st of April 2023 to 31st of March 24, and we are happy with that. We say use that. So that's it. Now we need to click create, and our tax return period will be created. Now you can see here the tax period on 1st of April 2023 to 31st of March 24. The submission status not filed using the accounting period, ending date 31st of March 24. So once we submitted this return to HMRC, it will be filed online. But for the time being, it says not filed. We are happy with that. Click open, and it will tell you you have linked a set of accounts to this return. If you would like to import now. Now I can import or I can attach the accounts because we want the information to come from the accounts automatically. So we said yes, import the account, and all the information from the account is come automatically. Look at this one. So this one we have a turnover 33. This one we have a profit. Now we can check our accounts to check is it match or not. If it doesn't match, then we have to look at again why it's not matching. On the other hand, some of the transaction, for example, entertainment, I don't have any. Depreciation, I don't have any, but I have a charitable qualified donation. You can see it is automatically picked. So if I have a depreciation, it will be automatically picked and add with the accounting profit. So it's very important to give the right categories. So even though the software pick automatically, they'll ask you to review it before you say import. So we are happy with that. We don't have depreciation, we don't have amortization, we don't have entertainment, we don't have any other fine or something that is not allowable for the tax purpose, only the charitable donation. So we said we are happy with that, and we click import. Now our tax return is imported to the CT600. And so far you can see here, it shows our tax liability 58,154.79 on the left top corner. So it's very important to understand it. If we want to go through all this step, we can click simple step and we can go through all this information we have, or we can click here check and finish, and it will show us is there any error on the tax return. Now it's very important, if you see any error, if it is a red, that means you have to enter this information. If it is yellow or like kind of yellow, so this one, it says Taxcalc has found the error or omission in your entries. Please check the matches below, resolve them before trying to submit. You return to HMRC. Now, without the red one, you cannot submit, but without this one, sometimes it's work, but obviously that is a warning. So you have to make sure you fix everything. On other hand, the accounts need to be attached. So you can see here, attach the account. Until we attach the account, it will give us the error. It will say the accounts is not attached yet. The declaration is not completed. And here the file online. When you click file online, one thing you have to remember, we need to make sure we have all the information. You say you can print and file unless like you have a valid UTR. Now this is the company UTR. Remember that it's not a personal UTR. It's the company UTR number. It has to be there. So let's have a look from the beginning, and we want to go from the simplest step. And here you can see everything. So for example, you can see the welcome company number. Now the company UTN number is empty. So look at here. So if I write here some number, for example, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now it says not, it's like, so it says the unique tax difference appear to be valid. So obviously, like if it is not valid, it will not take and will not be able to submit. As this company, just like the simple company, it is not like the real company. So obviously, it might give you the error, but remember that um, this is not the case when you do the actual work. All right, then you click next, and it will ask you some more information, type of company. So normally it is a limited company. If it is a property management company or charity, you have to select. If it is none, so you can just say none of the above. So if it is a trust or something, you have to choose in a different way. And is this company non-registered? So this is basically you really don't need for the time being. You can just read it, but you really don't need. If there is a warning sign, make sure you write it down. It says, please note that although the city 600 has been updated and the Northern Ireland page included, the NI boxes should not be completed as no NI corporation tax rate was agreed prior to 2018 earlier state. This is telling about the Northern Ireland, so you really don't have to worry about that. So we'll carry on, and here you can see select and import the account. It's very important. We need to import the account. Unless the account is attached, it will not be able to submit the return. So this is already imported. All right, so this one signing the return. So we need to choose who's signing the return, the name of the director, click, and the date when we're signing the letter. So 31st of January 2025, and the city 600. Just click everything, check the return date. Is there any trading loss? It's very important, like to look at this. If there is any trading loss, obviously like you have to enter. If there is any property income, you have to enter. So it depends on the company. For us, we don't have to really include because we don't have any property income. We don't have a loss from the previous year. Everything's from this year as a trading profit. All right, so if there is any loss, remember that it will help you here to carry it forward. So you can say available loss, carried forward from the non-trading. If there's a trading loss, available loss for the carried forward. So if you have a loss from the previous year, you need to include the loss either from before April 2017 or after April 2017 because the way of calculation is a little bit different. So for that reason, if you have any loss before 17 April, then you have to record in this box after this box. Then we have some more information. Chargeable gain. Definitely, you know what is capital gain. If there is any capital gain, you have to record it here. So if the business making a disposal during the year, they have to record on the capital gain section. Then tax calculation, it will show how much is the tax. And obviously, if there is any qualified charitable donation, if there any group relief, you can record here. But for us, it is not relevant. We'll go through one by one all of this thing. levies, tax reconciliation, indicator, so it's not relevant to us, losses, Northern Ireland relief, and bank detail, payment to nominee, so we don't need all of this thing. Now we have the whole tax return here, and in this tax return you can see all the calculation. So first you need to look at the corporation tax, and we call it city 600. We can see here our 1st April 23 to 31st of March. The first thing you have to look at the period, it's very important. Then we look at the profit, how much profit do we had, 233403, and we make some donation. That one is not allowable for the tax purpose, so you have to add it back. So our new profit will be 233 603. If we have a depreciation and if we have entertainment, the same way it will be added back here, and the profit will be increased. Then we have a trading profit. This is our trading profit. From the business we make this profit. Now we have to make the calculation. So we have a profit and we calculate the tax. The tax rate is 25% because our profit is more than £50,000, but we'll get little bit marginal relief, but it's not much. So if you know the formula for the marginal relief, so the 250,000 is the limit, and you minus your profit, so 250 minus 233603, and you make it 200 over 3 or 2, and you calculate this one, the marginal relief. But the software will do it for you anyway automatically. So the normally the tax rate is 19% if your profit is less than £50,000, but if your profit is more than £50,000, you have to make a straight away 25%, but you'll get some marginal relief. And if you do your AAT or ACCA, you know how to calculate the marginal relief manually, but the software will do it for you anyway. And we have a marginal relief. You can see here the calculation that shows a little bit here the difference. So your financial limit is 50,000 and the maximum limit is 250. So you find the difference between 250 and your profit. So 250 minus like 233.60, and then you have a divide, that is 3 over 200, and this is the upper limit, is the formula basically to calculate. So you have a marginal relief of £245. That's not much, but that's how it work. And our payment for the tax will be due on 1st of January 2025. That is 58,154. So that's how we're uh, going to calculate all the tax. And obviously if we like to show the PDF, we can click the PDF to open it. We can send to the client for confirmation, and we can ask them for review. So now if we click the last one, we have finishing the return, and here we have check and review. Now on the check and review, again, as I said, if something it shows a warning, you have to fix it. For example, attach account. So if you go here and we can attach the account, so you click attach account. So here we need to attach the accounts production, not from the external, because the accounts is already in the software. We use this one, attach from the accounts production, and we choose the period 1st April to 31st of March, attach. So now the PDF or the IXPR will be attached. So if you go to the warning again, you'll see this is gone now. So if you go check and finish, the first warning is gone. The number of associate company, so if we have any associate company, otherwise you have to just write 0, and we just say click and finish, and it will go as well. So check and finish. The unique tax reference number does not appear to be valid. It's not valid because it is not the right one. So obviously, like, we are just making up the unique tax reference number, but when you're working for the real company, HMRC will give you the company unique tax reference number, and that one has to be included on the tax return. Remember one thing, without a unique tax reference number, you will not be able to submit the return to HMRC. The same way, we need the authentication code to submit the accounts to company house. So these two number is very important to submit to company house and to HMRC. If you don't have it, you can always reorder it. So you can go to the company house and say, like, I like to order, or how to reorder the authentication code. So you can enter the company name and the address the registered address or the home address, you can order. So within 7 to 10 working days, you'll receive the authentication code. If you don't have the company UTR number, you can just type on the Google, reorder the company UTR. Again, you write the company name and number. So within 15 working days, you receive the company UTR number. But normally, you should have it because HMRC sent like the company UTR number anyway to you within 3 months after opening the company, or the authentication code, you'll get it as soon as you open the company. All right, so that's all we have here. Now, if you want to see the print, you can click that one, but obviously you need the UTR number first. And other than, you can see our review. This is the review. And we have city 600 steps. So this one is basically the tax return. And that's all. That's how you're going to prepare your tax return. So obviously, like you can file from here, file tax return online to HMRC, but we need a valid UTR number. When you use the tax scale and when you try to file the tax return, remember that you have to make sure you click not a test return, because the test return will be automatically marked. You have to unmark it, and it has to be the live submission. And after that, you get the confirmation from HMRC that your return has been submitted and accepted by HMRC. So very important to understand that. I think more or less that's all you have to know about the tax return, about the City 600. And you have to submit your tax return from the tax return section, and the accounts need to be submitted to company house from the accounts production section. So these two are very important, and that's how you're going to complete the accounts and the tax return for your client. And if you have submitted it, normally it takes few minutes to get the confirmation from the company house or from the HMRC to say it is accepted or not. If it is not accepted, remember that you have to check what is the error, and by looking at the error, then obviously you can actually resubmit it again, and you'll get the status it is accepted. Thank you very much for watching, and obviously, like this is the way we do work for the Taxcalc.